RBI గవర్నర్ మాట్లాడుతున్నారు. ప్రళయ్ చూద్దాం.
Be critical for a sustained alignment of the headline inflation with the target. Going forward, with the recent Rabi harvest remaining largely immune to adverse weather events, the near-term inflation outlook looks more favorable than at the time of the last MPC meeting in April. The forecast of a normal southwest monsoon by the Indian Meteorological Department, IMD, augurs well for the Kharif crops. Uncertainties, however, remain on the spatial and temporal distribution of monsoon and the interplay between El Nino and the Indian Ocean dipole. Geopolitical tensions, uncertainties around the monsoon and international commodity prices, especially sugar and rice and also crude oil, and the volatility in global financial markets pose upside risks to inflation. Taking into account these factors and assuming a normal monsoon, CPI headline inflation is projected at 5.1% for 23-24, with Q1 at 4.6%, Q2 at 5.2%, Q3 at 5.4%, and Q4 at 5.2%. The risks are evenly balanced. As noted in the April statement, the decision to pause was based on the need to assess the cumulative impact of past monetary policy actions while charting out our future course. Subsequent incoming data suggest that while risks to near-term inflation have moderated somewhat, pressures remain during the second half of the year, which needs to be watched and addressed at the appropriate time. According to our survey, inflation expectations of households for 3 months to 1 year ahead horizon have moderated by expectations is underway, and that our monetary policy actions are yielding the desired results. This also provides us the space to keep the policy rate unchanged in this meeting of the MPC. At the same time, given the uncertainties, we need to maintain Arjuna's eye on the evolving inflation scenario. Let me re-emphasize that headline inflation still remains above the target, and being within the tolerance band is not enough. Our goal is to achieve the target of 4% going forward. As Mahatma Gandhi had said, the ideal must not be lowered. The continuation of stance of withdrawal of accommodation should be seen from this perspective. I would now like to turn to liquidity and financial market conditions. Surplus liquidity has, as reflected in average daily absorptions under the LAF at rupees 1.7 lakh crore during April-May, was lower than 2.9 lakh crore rupees during the full year 22-23. The shrinkage in surplus liquidity during April-May was, among other things, due to maturing of the TLTROs which we had extended, which we had given during COVID times. The seasonal expansion in currency in circulation and build-up of government cash balances during this period also moderated surplus liquidity. Since the third week of May, however, the decline in currency in circulation and pickup in government spending have expanded system liquidity. This has got further augmented due to the Reserve Bank's market operations and the deposit of rupees 2,000 bank notes in the banks. The prevalence of surplus liquidity amidst higher recourse to marginal standing facility MSF by some banks suggests skewed liquidity distribution within the banking system. To address this situation, the Reserve Bank conducted a 14-day variable rate auction, that is a VRR auction, amounting to rupees 50,000 crore as part of its main operation on May 19, 2023. Similar to two such auctions conducted earlier in February and March this year. Reflecting swiftness in its liquidity action, the Reserve Bank conducted a 14-day variable rate reverse repo auction. The earlier one I referred to was variable rate repo auction. Now I am referring to variable rate reverse repo auction, which is VRRR. So reflecting the swiftness in its liquidity action, the Reserve Bank conducted a 14-day variable rate reverse repo auction, that is a VRRR auction of 2 lakh crore on June 2nd. And thereafter we have gone on to conduct a 4-day VRRR auction of 1 lakh crore on June 5th, a 3-day VRRR auction of 75,000 crore day before, that is on June 6th, and a 2-day VRRR operation auction